Ever found yourself wondering about your current tax-saving strategies? If they're really the best ones for you? Pondering over whether you're saving enough or paying more than you should? Tax-saving strategies can seem like a maze, a puzzle that's hard to solve. But fear not, it doesn't have to be as daunting as it appears. Today we're pulling back the curtain, breaking down tax-saving strategies into easy-to-understand steps. So sit back, relax, and let's take this journey into the world of taxes together. First off, understanding your income and the tax brackets is fundamental. Let's delve into it, shall we? Income, simply put, is the money you earn. It can be from your job, your side gig, or even your investments. Now, tax brackets are the ranges of income that the tax authorities use to determine how much tax you owe. They are like steps on a staircase, where each step represents a different portion of your income. The higher the step, the higher the tax rate. Now, why is this important? Well, knowing your tax bracket can help you plan effectively. For instance, if you're on the edge of a tax bracket, making a deductible investment could drop you into a lower bracket, reducing your overall tax liability. It's all about playing the game wisely. Remember, tax brackets are the key to unlocking smart tax-saving decisions. Moving on, let's delve into the world of tax deductions and credits. Now, these two terms might sound a bit complex, but they are actually your best friends when it comes to reducing your tax liability. Let's start with tax deductions. These are specific expenses that you can subtract from your taxable income. Think of them as discounts on your taxable income. They can range from certain business expenses if you're self-employed to student loan interest if you're still paying off your college debt. On the other hand, tax credits are a bit different. They directly reduce the amount of tax you owe, dollar for dollar. For instance, if you owe $2,000 in taxes and you have a $1,000 tax credit, your tax liability reduces to $1,000. Now, that's a significant saving, isn't it? Some common tax deductions include the home mortgage interest deduction, the student loan interest deduction, and the medical expenses deduction. As for tax credits, they can range from the child tax credit if you have little ones at home, to the lifetime learning credit if you're furthering your education. Remember, the key is to understand and take advantage of these tax deductions and credits. They're there to help you, and they can make a big difference in your tax bill at the end of the year. Understanding tax deductions and credits can significantly reduce your tax liability. Next up, let's talk about retirement contributions and health savings accounts, or HSAs. You see, saving for your golden years and potential health expenses is not just a wise move for your future, it's also a smart tax strategy. Retirement accounts such as 401ks, individual retirement accounts or IRAs, and others offer you a golden opportunity to save for your retirement while also reducing your taxable income. Contributions to these accounts are often made pre-tax or are tax deductible, meaning they can lower your overall tax bill. For instance, if you're in the 24% tax bracket and you contribute $5,000 to your retirement account, you could potentially save $1,200 on your taxes. That's a win-win situation, isn't it? Now let's shift our focus to health savings accounts. These are like magic pots for your health expenses. If you have a high deductible health plan, you're eligible to contribute to an HSA. Contributions to an HSA are made pre-tax, and withdrawals for qualified medical expenses are tax-free. Plus, any interest or gains on the money in the account are also tax-free. It's like a triple tax benefit. So you see, planning for your retirement and health expenses doesn't just secure your future. It's also a fantastic way to save on taxes. After all, it's not just about how much you earn, but how much you get to keep. Planning for retirement and health expenses not only secures your future, but also helps in tax savings. To wrap up, remember these key points about tax-saving strategies. Understanding your income and its corresponding tax bracket is fundamental. Leveraging tax deductions and credits can significantly reduce your tax burden. Moreover, making contributions to retirement accounts and health savings accounts not only secures your future, but also provides substantial tax benefits. Armed with these strategies, you're now ready to make informed tax-saving decisions. Remember, when it comes to taxes, knowledge is power.